The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 23rd fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, you can always send me an email, steve@tfnn.com. In that heading, just put radio show question or something along those lines. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have a Dow trading down 4 points. She's trading out at 21,393. S&P is up 4 points. Trade out at 24.38. NDX 100 up 0.4%. Trade, that's at 21 points. Trade out at 58.01. Russell 2000 up about 0.5% or 6.5 points. Trading out at 14.11. You've got the volatility index trading down at 10.06. Gold is up $7. Silver is up 14 pennies. Light sweet crude is up a nickel, trading out at 42.80. Leading the charge here, dollar-wise to the upside, it is Googly. Google's up $6 and change, trading at 983.26. Synex Corp up $5 or 4%. ASML Holdings up 3 3/10% or $4. Priceline is up $4. Kite Pharmaceuticals up 4. Synchronous Technologies up 4, a bunch that are up 4. To the downside, you've got Regeneron Pharmaceuticals. Yeah, the one that nearly completed the consolidation move out here is up 18 or down $18. That's about 3.5%. We'll take a look at that. Bluebird Bio down $11. Whirlpool off 7. AutoZone down 7. Charter Communications off 5. Bed Bath & Beyond down $4. I want to take a look at, of course, what you want to look at. And many of you might want to know, well, what are the markets doing? Of course, it always depends on the time frame that you and I decide to look upon. Let's just kind of get a feel with these markets that are somewhat sideways-ish, whether they are, they aren't, what's going on inside the equity futures contracts. And to do that, I'm going to go ahead and pull this set of charts up on my screen out here. You're looking at 30-minute time frame charts. The ES Mini is in the upper left. The NQ is in the upper right. Lower left is the Dow. Lower right is the Russell 2000. And what is interesting here, we'll start with the ES Mini. And you're going to see, speaking of consolidations, you're going to see the consolidation. I drew this pattern in before, well, I drew it in early this morning before I started trading to be able to use the top of that as a objective, a price objective, once price climbed above 24.30.75 out there. And voila, that is exactly where price stopped. So we know that that is a good level of consolidation. Now, approximately where is that price? It's at 24.39. So 24.39 becomes the top of the consolidation. The bottom of the consolidation out here is 24.28. So you have a 10 to 11 point move of where price should go to once either the top or bottom of the consolidation pattern breaks. Which one is it that's going to break? I don't know. But you definitely want to stay tuned, because then you would have a nice move. But to the upside, the measured move probably takes us back into the 24.50-ish. Well, you just had 10 points, right? What did I say? It was 10 or 11 points, 24.39, 49.50. There you go. And from the level here of And if you take a look at from 24.28, you'd be down to 24.17. And 24.17 would get us right down to these lows that were in here back on June the 15th. But today is June 23rd. So kind of and it's really important, no matter what it is you're trading, to try to identify what the market conditions are, because in consolidations you can really get, if you're an intraday trader, you can get chopped around, and you certainly want to be not buying the top, but buying the bottom and selling the top, so to speak, out here. Not so to speak, actually doing that. So that's in the ES Mini. Again, short term, that only takes us back into about the June 20th, so just a few days out here. If we take a look at the Dow equity futures contracts, and we go back to about the same time frame, you're going to see a nice little, very clear descending trend line. And until price takes that out, what you have to assume is simply that is resistance. Now, if price does take that out, then where does price head to? We would take a look at market profiles, a number of different things out here. Just simply from a swing point-ish on a 30-minute basis, you'd say about 21,408 would become the target area, either that or 21,448. But right now, you have a descending trend line inside of the Dow equity futures contract. Now, price was hitting that level at the same time that the ES Mini was hitting the top of its consolidation pattern. We're going to go to the Russell next, because as we take a look at the Russell 2000, again, using a similar time frame, and actually a longer time frame. This gets us back to June the 9th out here. Let me just go ahead and explode it up on the screen a little bit more. You're going to see a nice little descending trend line. That price ran right into this afternoon, just a short time ago. And that is a level of resistance. Now, the important thing for those of you that are shorter-term type traders is you have some very clear lines of resistance out here that once broke, then you may have some price projections or some swing points or other tools that you can use there. So we've got 3 of the 4. Now, the perplexing one, so to speak, is the NQ. Inside the NQ, forget about my green rising trend line, although that is the bottom from June the 15th. So let's not ignore it. But you do have a rising trend line, in this case here, for the NQ. But we also had a descending trend line, short term. This from June 22nd, so just the last couple of, well, just 2 days, if you will. And you will. And we can see that that level was broke. Where price went right up to was, in essence, the top of the swing point. I don't know that it got exactly there. Let me just put let's put another red line out there. Let's see here, red horizontal line. That will work. So there, once price broke above resistance, the descending trend line went right up to the previous swing point. That horizontal swing point, 58.14, didn't exactly get up there. It was probably a couple of ticks away from doing that, but that becomes your new resistance area. In fact, what we can say, what you and I should say at this stage, is the descending trend line has given way to what? Whoops, to a consolidation pattern. So we can get rid of that descending trend line. You and I really, Jimmy Crackhorn, whoops, I got rid of the wrong thing. In fact, let's do this here. I'll just simply draw in my box, because this is going to assist me with my trading decision. So, as long as I'm here, I might as well actually get some of my own work done, right? So if we take a look at that, now what we have here is we have a nice little consolidation pattern inside of the NQ as well. So all 4 of these equity futures contracts have given us key areas of either support or resistance. How important is that to us? Muy importante. Steve Rhodes with TFNN. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're taking a look at right now on the screen here is the ES Mini, the daily chart. And one of our dinners pointed out, aptly so, that the ES Mini hasn't moved really since June 2nd. Here, if we take a look at just really the close on June 1st, the open on June 2nd, you were 24.27. We're 24.36 right now. And that's an excellent point. And I want to thank Mr. Z for pointing that out to me, mostly because when you're in a choppy market, that's right, choppy, sideways market, a very cool tool exists where you can help to identify what the next move is likely going to be. Now, you can't identify that until after it happens. If you take a look at my screen out here, the very bottom panel of my screen, it's a tool that was developed by a Australian trader, E.W. Dryce. Not really too well known out here, but it did create a cool tool out here. I used to have to do this by hand, and thankfully the folks at eSignal went ahead and actually programmed it, so it's part of their standard tools out there. Why they did it, I don't know. It's not that tough to program, but in any event, what I want, and the cool thing about it, for me, the cool thing about the tool is that if you take a look at the red lines that are on my screen out here, the top red line is the measurement value of 0.61 or 61.8. And the bottom line is the value of 38.2. So your 0.382, your 0.618 level out here. Now, the way that this tool is used, and it is especially good in choppy markets, which we, in essence, have really been, and this market has moved for lots of long periods of time, sideways-ish. This is the ES Mini. The way that the tool works is that when the indicator here gets below the 0.382 level, it's an identifying marker that a trend is about to end. Now, you can stay below this level here. It's really when price pops right back up above that area, back above. So you get below. It's kind of like it's not David White's the 3x3 deal out here, but in theory works similarly. You get above, you get below. In this case here, you get below, and the trend is coming to an end. And especially when you get back above the 0.382 level. Now, trends begin from above the 0.618 area, and when you dip back below it. Now, it does not tell you which direction price is going to go, but when you see price get back inside the range, so to speak, and then you see the direction that it's going in, it's really a very cool tool. We can see back here, back in the May 16th type time frame out here, when price moved back below the red line out here, that ended up being the bottom, May 17th, and price in essence continued to move higher. So you can utilize this tool. Many systems, or some systems, have it. If you remind me, we'll take a look at it from time to time. And I just really would not have even pulled it up on my screen had the note not been posted about the sideways movement for such a long period of time. So Ruby writes in, Steve, I have a question for you. How can somebody be so bullish or others so bearish at these levels? If they use technical analysis, which they do. Everybody uses some kind of technical analysis. Even if it's fundamental, it's still technical. I do not have much experience, but that confuses me. Can you be so kind to explain that a bit? I asked this morning, but did not have an answer. Well, yeah, you didn't ask me. I didn't log in until a little bit a while ago. So that's a great question. And the first thing that I would say, Ruby, it's not me that's bullish. It's the charts that are bullish. And what I mean, I can give you, in fact, I can give you 8 or 9 or 10 reasons to be bearish. I absolutely can. And I question myself, just so you understand, there's not a moment or a day that goes by where no matter what I believe I'm interpreting, that I'm not looking at the other side of that deal out there. So I don't want you to, and I take seriously that which I communicate to you, because I don't want to be leading you astray. It's really not my intention. It's not hype. It's not anything. So, Ruby, one of the things that you and I want to always make sure that we are aware of, as soon as I can find it, is what's the seasonal tendency? What is the weather pattern like this time of year out here? It's like planning a trip, right? If you don't like winter, you don't plan a trip to Colorado in December. But if you like the outdoorsness stuff, you go right now when it's like 90 degrees out there. And so if we take a look at our seasonal cycle that we're in today, or Monday, should in essence be a bottom. The market should have been moving lower for the most part since about May 19th. If not May 19th, about June 18th, so 30 days later. And as we just took a look at out here since June 2nd, we know this for sure, the ES Mini has moved sideways. Now, this is with regard to the Dow. So let's just take this off of the screen here, go take a look at the Dow and put this up here. And we can see most certainly when we take a look at the Dow, this is no longer an open gap. Let me get rid of that out here. That if I try to put, where did it go? Right here. I just try to put in one sense in one corner. That way you can take a look at both things out here, sort of both things. How do I squeeze this together? That might be a little bit easier. There we go. We certainly haven't seen this. Now, this is the seasonal tendency. There is nothing that I ever do where I will ever share with you or say to you, well, the pattern has inverted. The moment I do that, just shoot me in the head, take a 2x4, whack it up against my head, because what in the Sam heck does that mean? That must mean that I have to be right all the time. There is no such thing as an inversion. No matter who says it, it just doesn't exist out here. I think instead what it's telling you is just how strong then the trend is. So we've been in a period of time. We have been in a period of time from May 19th to June 25th. And if we look at the Dow and I go to May 19th, let me just go get a red line that we'll just draw. Oh, I think the red line's already there. So where is, red horizontal line. Where are we on May 19th? Come on, find May 19th. May 19th, right here. Oh, geez, right where there was a gap. It's right where the gap is, where there's an open gap at 28.57, basically. And you can see that the market has not gone down. So in a strong seasonal tendency for the market to move lower, it hasn't. To me, Ruby, that is a bullish indication, not a bearish indication. Not even close. It's just not even close. Now, then if we take a look at this, the market, or the Dow specifically, typically makes a bottom now. Today's the 23rd. The 25th is Sunday out here. So, and we use these dates as guidelines, not as exactness, although many times they exactly do top when they're supposed to. I believe in 2015, there was a top like on May 19th or so, or certainly right around there. In any event, for the next month or so of trading, what the market should do is continue moving higher until about the middle of July 21st out there. And then, potentially, if there are signals, that's where you get that real summertime swoon down into the bottom in October. Look, these are the seasonal tendencies. Do they always work? No. Does that mean they've inverted? For God's sakes, or anybody's sakes, or at least Stevie's sakes, hell no. It just means it's really going against the trend. That is either bullish or bearish. In this case, bullish. Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome welcome back, folks. So Ruby and I are having a conversation out here, and you're asking great questions. Now, what I can't do, Ruby, is tell you what the others are thinking and why, and that's really up to yourself to listen to each of us and discern what you think is the right move out there. The one thing about TFNN, the great thing about TFNN, is that you're going to definitely get different viewpoints. Now, sometimes all of our viewpoints line up with each other, and maybe that's a good thing. I don't know, but it certainly is not because it's been contrived because we have marching orders or anything along those lines. So instead, it's really about each of us look at different charts and different time frames and so forth in order to be able to come up with what we believe the charts are communicating to us. Now, what I have really shared with you with regard to the bullishness piece of it, just so you understand from a radio show standpoint, is what I have stated is the markets are going to be much higher than where they are come this holiday season versus where we are at now. So with regard to the day-to-day activity or when and where to get in, make sure that you're always staying inside the time frame zone that we're looking at. And so different people are analyzing different charts with regard for different time frames out there. I can share with you right now that we do not have confirming signals inside of the NQ as an example, a real driver. We took a look at how that was consolidating. Here's the daily chart. It's not unusual that price found resistance at its previous swing point out here because price hasn't been able to close above Stevie's red line. Strong rising trend line that has not been able to be busted out here. And that tells you something, or that should tell you something. But until price is able to close above Stevie's red line, it's not out of the woods. It is a natural area of resistance, which it has traded into. The price point on that is right around 58.11, 58.12, 58.13. I don't have the exact, I can't see the exact number right here, but you can see where price is trading really right into it. So remember, the time frames that we would speak about are always going to be different, or they're going to be, just make sure we have the time frames out there. So I hope that helps you out. We talk about consolidation. The last thing that I'll do here, because I don't want to just repeat myself for folks, you're tuning in, you typically want to hear something new or something, with regard to what's going on out here. Here is the, I got to turn off that, let me turn off the choppiness index because it's not really appropriate for what we're looking at the moment. But, here is the, and I believe in these consolidation patterns out here. If you take a look at, this is the NDX 100, and we take a look at this rectangular box out here, there in essence is your consolidation. And when price breaks above a consolidation, what it does, Ruby, is it gives you a measured move. And that measured move is equal to or greater than the consolidation. If we take a look at, this is again a monthly chart out here. If you take a look at this move, this huge move, this is the monthly chart that you and I are looking at. This is as strong a move as you and I have seen. Let me turn off some of the tools. Let me turn off trend lines out here. I can always put this stuff back, the rectangles, the channels. Just look at the candles, right? Because they're communicating to us. Is there anything that anyone out there, anyone, I don't care if you're bullish or bearish, whatever it is, but is there anyone right now that can actually look me square in the eyes since January of this year and not say that we have had anything less than a big breakout? I mean, a big breakout inside the NDX 100. Now, you probably didn't me or the chart or anybody to share with you that that's what we're seeing out here. But you have to admit, this is one of the larger with some nice bars on a monthly basis where price is clearly broken out above the old highs out there. I mean, if you and I were going to go ahead and write in an A to B equals CD pattern out here, for those that are A to B equals CD aficionados, I would be embarrassed, but I won't be, to tell you what the long-term A to B equals CD price projection is on this thing here. The A to B equals CD price projection on this gives us a 1-to-1 move of 76.07. I wouldn't be embarrassed. That's basically in the cards right now, 76.07. And then 86.18, the 1-to-1.272. If you were going to learn just basic A to B equals CD patterns out here. One of the things you would know is by only doing less than a 0.382 retracement, which in essence is what the NDX has done ever since the bottom in 2008, when it put in the bottom on November 1st out here, there has been no retracements. That was the deepest retracement that we saw. Maybe one just slightly different. I could go ahead and choose a different A to B equals CD level here. It won't be substantially different, but let's go ahead and at least put that one in for you, because somebody might say, well, how come you didn't use this? And which we can out here, and it's going to show you the percentage, 25% retracement. So it gets you to where, and this move, by the way, if we thought that the move from 2008 to this high out here in June of 2015, if you thought that that was a strong move, that's nothing. When I say nothing, that is nothing compared to the move that we are seeing now. Look at what side of the line of that C to D leg price is on. It is on a just simply huge trajectory. This is the message of the markets. This is not the message of Steve Rhodes. This is not the message of, this is, if you enjoy technical analysis and you enjoy the lightning bolt pattern, you got to drink the tea when it's brewed for you. And it's brewed. I don't even know where the heck that came from, but it did. Oh, I've been having some great dandelion tea. I got to tell you, it's some of the best tea there is. I got it at Fresh Market. If you're a tea drinker, it's dandelion tea. You'll see it in a little round cylinder thing and it has a little bit of vanilla in it. It's almost like drinking sake without the sake out there. But and the voice is certainly much better. But so Ruby, I could go on and on and on with regard to longer term what the markets are communicating to you and I. And when it changes, and should it change out there, I'll be all over that bandwagon too when it changes. So anyways, I hope that assists you with regard to, I'll put my charts up and the thought process up against anyone that is out there and not get too caught up. When people start talking about valuations and so forth, I mean, okay, I hear what you're saying, but it's still not enough. All right, so Marie here writes in, put radio show, thank you. Could you look at Duke Energy? I'd like to buy this. What would be a good entry point? Thanks, Maria. I can, but what is Duke? Is Duke Energy as simple as typing in D-U-K-E? I don't know if it is. Let's go see. D-U-K-E. Duke? No, that's not right. So let's see if we can go figure this out here. Duke Energy, and I apologize for not knowing. It's looks like it's D-U-K. That was close, right? D-U-K. So the question is that Marie had is what would be a good entry point? The only problem is that you didn't share with me what your time frame horizon is, because that is really key here with regard to being able to provide you with information. This happens to be the monthly chart that is on our screen. But let's go ahead. Let's put the daily chart on our screen. It looks like we're going to be going to a break here in about 10, 15 seconds. And so I will take a look at Duke Energy, and then we come back from the break out here, Marie. We'll have some established buy points out here for you. It's not today. Yesterday, price closed below its daily profile. So let's go try to figure out if there's some volume or something in there for support, or we'll try to find something for you on ticker symbol D-U-K. We'll be right back, folks.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. That's interesting. I was able to get in this time around. Very, very interesting, as who used to say that? What was that character? From Rowan and Martin's laughing out there. Okay, well, I have a little brain contusion, but we won't worry about that. We want to come back and answer Marie's question, for goodness sakes, out here. And her question was, hey, where's the good? She wants to go ahead and get in. Artie Johnson, thank you very much, Mr. Bill. We take a look at Duke. So if we're looking at this chart, here's what we know about Duke Energy. We're going to look at two different charts for you. This is a weekly chart that we have up here. The last time the price was up here was back on the week of September 12th, 2016. Let me move our little gauge out here. And the volume behind that move on a weekly basis, 17.2 million shares. Now, the last week is when price got up. In fact, did it test that level? The high was 87.75, 49. Pushing into that with 15 million shares. So 15 million pushing into a swing point that has 17 million. So just a little bit light on the volume. In fact, so too this week. Now, I have different market profiles up here. I've got daily, weekly, and monthly profiles out here on the screen. So if I looked at this to try to suggest to you where price would pull back to, I'd have to just simply go with the trend line. Off of the low weekly chart, December 5th would be a touch point, and the other touch point would be February 13th. I would start to take a look at rising channel lines, rising trend lines, things along those areas. Of course, it depends on which week when price would get back there, what the price would be. But it says in the 84-ish range. Now, that's one way of taking a look at it. Let's look at horizontal, right? Because markets move sideways, up or down. Usually up and down within a sideways range out here. And the sideways range would be our horizontal trading ranges. And what we can also see, the green on these, the green horizontal lines on this chart happen to be weekly horizontal trading ranges. So when price got up to 87.59, it also ran right into a level of resistance. If price could close above it, in this case here, now get above 89.67, and that's one of the weekly midpoint lines, but I have several midpoint lines out here. What did I do on monthly? I went to quarters for one of the other charts out here. Let me just put this back. But we know that that's an area of resistance. Where's a spot to look for buying this? 83.51. Right around there. So the 83.51 kind of runs right into our trend line and happens to be the monthly. That's the red horizontal line, the monthly horizontal trading range level. So, Marie, thanks for writing, and I hope that helps you out. Jim writes in, MBT, what's your opinion of MBT? Yes, for dividend, but have been watching and waiting to get to lower at least a 1 year low approximately. So, Jim, thanks for writing in. Let's kind of do the same type of scenario. So I just type in the symbol over here, and I see, yeah, this thing has certainly been moving lower. Let's come back and take a look at MBT on this specific chart out here. Again, a weekly chart. So you're buying it for dividends. Their dividends seem to go all over the board here. Let me put this on a daily, just make sure that that's not screwing anything up. I can't believe that it would be out here. No, it's really not. So their dividend, man, it's been jumping all over the board out here. So let's just take a look at it. Your question is, what's your opinion on MBT? Cancel this. And I guess that would mean, hey, where's it going? Because you'd like to buy into it, right? So what do we know about this equity? Is price coming back into any kind of a breakout area? Well, yeah, it is. First, it's below all profiles out here. It's below daily. It's below, well, it's not below daily. It's below weekly. It's below monthly. And it's in between a profile from a daily standpoint out here, but it's not a signal to buy. Let me also get over to my other charting program, my Ninja Trader application. Let me put an MBT there, just see if there's anything that shows up for you on a daily basis that would indicate anything, any type of and there's not anything as we speak at the moment. You might get more counter trend rally out of this, by the way, and that counter trend rally should take you to about 902. You're trading at 884 right now. So if it moves higher, that should be anticipated and expected as we speak right now, but it's not necessarily an indication of a bottom. There's a little hammer candle that formed out here on May the 4th. That's the swing point, volume of 6 million shares, and that was passed with still light volume. So it's not as if it's taken out a swing point with volume out here. So what's my opinion? You've got to wait for some type of pattern to complete, even though there's not a confirmed A to B equals CD out here. Well, let me see if I can add that study to this. I'm sure that I can. See how quickly it does that. There we go. So the A to B equals CD pattern, or some other pattern that would show up. It's just not present right now. And here is what I would draw for my lightning bolt. This is what kind of sticks out at me. This could get down into about the $7.34 area out here. And at $7.34, you get back into the November 2016 swing point. That would be a measured move, 100% move of the move out there. So right now, with what I'm seeing in this chart here, I think that's what I would have to give to you, Jim, as the space or place to consider taking a look at a long position inside of Mobile Telesystems, PJSC out there. All right, so let me see. Larry's got a question here. AKS. Wondered if you could cover AKS today on the show. What do you see? I'm long in the mid fives and would like to add. Would you add here and now with the gap higher and over 660 resistance? All right, Larry from Detroit, thanks for writing. So let's go take a look at AKS. Steel, whoops, I got to type in the right symbol here. Steel stocks that are on the move out here, I believe. AKS, that's, yeah, steel, isn't it? Yeah. And as we take a look at it, this is a daily chart. So what this has done right now, the question, I'm going to answer this question. You say, would you add right now? The answer is no. And the answer is no if we just simply utilize our market profile system out here. Now, it's a monthly. I don't usually have the monthlies. They are out here for a specific reason because this chart specifically is what I'm using for clients where I've gone through the entire group of companies that have funds to repatriate back and separated those that are good dividend payers from okay dividend payers to basically not so good dividend payers so that they can create a longer-term portfolio out here and providing buy points. I'll be completing that piece of it this weekend, God willing. And so I would not be buying it just at the moment here. I would wait for a pullback. So you're in at 5s. By the way, great trade. Congratulations on that. Let me just come over and take a look and see if we can get anything on AKS on horizontal trading ranges. Man, this thing is looking basic. Has been looking pretty ugly out here. So as we take a look at this, this does suggest, though, that if price is able to get above, if price is able to close above 688, and if price closed above 688, you're traded 674 right now, Larry. If price closed above 688, then what you would be looking for is very likely a move up into that horizontal trading range boundary line of 807. That's both a weekly, and because it's green and red, and monthly level out there. So that would be your risk-reward scenario. I wouldn't do it as we speak right now. You've got a nice position in it. I wouldn't sell it, but I wouldn't add to it right here. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Hey, real quickly here, with regard to AKS, I can also give you another potential buy point. That's Stevie's red line out here, which is about 617. So on a pullback, Larry, to 617, you'd take a look at adding to your position. So best of luck to you. I have a question here to take a look at Hydrogenics Corp. HYGS is a ticker symbol. One heck of a move that this has had off of the December 22nd low out there. December 22nd area, you can see once price was able to clear a key level of support, 639. This thing was up at 1115. The question is, on HYGS, what's a good entry point? Let's just put this chart up on the screen out here. And HYGS, let's look for Stevie's red line, and that's going to be about 1033 if you want to go ahead and take that trade out there. And that is on that's what it would look like to me. That's on this screen. So you've got 1033 out here, and yeah, that's about this is the weekly chart. Looks pretty strong as we speak right now. So I hope that assists you there. Peak D. Let's go to Tim in Cleveland. Tim, thanks for calling. Thanks for holding. How are you today?
Hey, I'm doing great, Steve. How are you doing today?
Excellent. Thanks so much for asking. And are you in Alibaba?
No, I'm looking for an entry point for this. I was thinking it kind of bounced up a little bit here just the past half hour or so, I guess, really. But anyhow, I was kind of thinking of an entry somewhere around here, but I thought I'd check with you, see what you thought.
Sure. So thanks for doing that. Boy, this one's going to be a little bit more. So what's your – I guess here's where we get to maybe a little bit of difficulty in taking a look at the stock chart out here is, it's right now it's finding resistance in the 150 area. So in looking at this pattern, this is a weekly pattern out here, I can make a case where the next price projection would take us really into the 159 to 169 area. But you'd like to buy this on some type of a pullback here. It's trading right now 143.19, 143.21, and I'd really want to study this chart more than the next minute and 30 seconds that time is providing us. But this did gap up a couple weeks ago. It looks like, let me change this to daily out here, and on any pullback with light volume, that would be an area to be looking at. So one spot is going to be the low, which is inside the gap of June 15th. That's what I would be first watching, which is about the 133 level. If this were to start to move to the downside out here, then you'd be looking at about the 126 area. Then it probably gives you or provides you with a pretty decent reward to risk. This could easily pull back to just 140, 130, but I would be hesitant to say that is the spot to go ahead and buy. So I would really need to do more work. Have you been following this for a while, or why Alibaba at this stage here?
I've been following it actually off and on for a little while. I'm thinking these guys are some real competitors to Amazon. I think these guys could be a survivor, sort of running maybe in second place to Amazon, but kind of running along, having some of the same advantages that Amazon may have.
Sure.
May get pulled up. It was interesting you say the 141. What was 141.39? I was kind of thinking about maybe a partial or a small position right around there, and then further bigger position if it pulled back further, of course.
Yeah, I can tell you this. There's not anything bearish that I see inside the charts when I take a look at them for Alibaba. It just starts to become, is this going to fly like Amazon did from the 280 area? I don't know. This has had a pretty good run. You'd like to try to buy it on a pullback. So, you've been watching it. I'd say keep watching it.
Okay, good deal.
All right. Thanks so much for calling.
Guy.
You bet, Dave. Folks, stay tuned. David White is up next. Have a fantastic weekend. We'll see you on Magical, Marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.